before you rush to pull out your phone, open that trading app and throw your hard-earned money into that hot stock your friend swears it will change your life. Pause, think, and take some minutes to reflect, because what you are about to do might feel like a smart financial move, but it could quietly be the beginning of a very costly mistake. You see, in today's world, investing has been dressed up as something very easy, something effortless. Social media is filled with stories of overnight success, screenshots of massive gains, and confident voices telling you just start, you are missing out. But what they are rarely showing you are the losses, the panic, the regrets that comes from jumping in unprepared. The truth is simple, and it is not as exciting as this. Not everyone is ready for investing, and if you move too quickly, driven by hype, pressure, or fear of missing out, you might just lose money. You could damage your entire financial foundation. So before you take that bold step, before you commit any single naira, you owe yourself something far more valuable than just trending news to invest. So today, I'll be telling you something most influencers or investors will never say. The stock market is not your shortcut to becoming a millionaire overnight. In fact, jumping in too easily with the wrong mindset can quietly destroy your finances. So before you start investing any single naira, ask yourself this one simple question. Am I actually ready for the market, or just chasing clout or hype? Let's break it down. Here are 5 types of people who should not be investing in the stock. If you are in any of this category, you shouldn't dare to invest in shares. You can try other investments that I'll be showing you at the end of this video. Number 1, people with no emergency fund. Listen very carefully. If you don't have at least 6 to 12 months of your living expenses saved up, you are not ready for stocks. You are surprised. Why? Because the market does not care about your personal problems. Prices goes up and down suddenly, and if life hits you with an emergency like hospital bill, rent, family needs, you will be forced to sell your investments at a loss. That's how people lose money in the stock market, not because they invested wrongly, but because they were unprepared. So the golden rule is this: build your safety net first, then think of investing after. Number 2 kind of people that should not invest: people with no stable source of income. If money is not coming in consistently every month for you, every week or every day, then investing becomes like a gambling. Stocks are not magic. They grow slowly over time. Take that, they grow slowly over time. If you are depending on them to survive, you will keep withdrawing at the worst possible times. That is how the losing circle begins. You need an income to feed your investment, not the other way around. Using your investment as your income that pay your bills monthly won't help you. So secure your income first, then invest a portion, not everything. Number 3 kind of people that should not invest in stock market: they are people who cannot control their emotions. Let me be real with you in this one. The stock market will test your mental strength, your financial strength. Prices will go up and you will feel like a genius. Then prices will crash and suddenly fear will enter your body. Yes, if you panic and sell every time the market drops, you will always buy at a high price and sell low. This is the fastest way to stay broke in the stock market. Successful investors are not the smartest, they are the most disciplined. It is important to understand that when a company pays dividend, the stock price often drops shortly after. That's because the company's value has just been paid out to shareholders. Here is the insight many people overlook: the most strategic time to buy is often after dividends have been paid, not when a company announces payment of dividends to shareholders and qualification dates, when the price starts to adjust. Number 4 kind of people that should not invest in stock market: they are people with zero financial knowledge. Entering the stock market without understanding the basics. It's like driving on the highway without knowing the traffic rules. What happens? Accident. You don't need to be an expert, but you must understand basic things like what stock actually are, how risk works, why prices moves. Because if you don't, you will follow noise, you will follow trends, and you follow hype. And hype, my friend, is where money gets lost. You have to learn first. Use your phone, browse, gather knowledge and information about that company you want to invest in, its owner, how they make their money, did they pay dividend, etc. Investment should come later, not vice versa. Number 5, people looking for quick overnight returns. Let's kill the illusion here right now. Let us just kill it. The stock market is not a double your money scheme in weeks. No. That mindset will push you into risky decisions, fake opportunities, and unnecessary losses. Real wealth in the market is built through patience, consistency, and long-term thinking. If you are desperate for profit, My friend, the stock market is not for you. It will humble you. So before you invest that hard earned 100,000, hard earned 500k, hard earned 1 million, that thing you save over a year, pause, think, take a deep breath, and to be honest with yourself, because investing is not just about the amount of money you put in, it's about the mindset, discipline, and preparation. Get those right, and the market can change your life. Get them wrong, and it can quietly drain your finances and send you into depression. So if this opened your eyes, hit like and subscribe to Chat Talk Money, because yeah, we always do things just to make your financial life so easy. You don't have to be a millionaire to live comfortably. You have to create your own wealth yourself and live your own world as it is. So I'll see you in the next video, and do have a great day. Bye.